and welcome to News on the Hour, your daily dose of news and updates for a whole 60 minutes as we bring you all the fresh news making headlines across India and the world. First, there'll be national news, all the COVID updates, India's particular performance in the Tokyo Olympics this time, and much, much more. But first, let's take a look at the headlines. In a first-of-its-kind initiative, Prime Minister Narendra Modi to virtually interact with heads of Indian missions abroad and stakeholders of trade and commerce sector today. PM to give clarion call for local goes global, make in India for the world. Today in Parliament, Lok Sabha is slated to discuss COVID under Rule 193. Finance Minister Nirmala Sitharaman to move Taxation Amendment Bill 2021. Dharmendra Pradhan to move Central Universities Amendment Bill 2021, while several private members' bills also lined up for introduction in both the houses. India slams OIC for reference to Jammu and Kashmir, saying that the organization has no locus standi in matters relating to J&K. Also lodges firm protests with Pak High Commission in New Delhi over attacks on the minority communities and places of worship in Pakistan. In a significant achievement, India's cumulative COVID vaccination coverage crosses the 49 crore landmark. Close to 58 lakh vaccine doses administered in last 24 hours, with over 44,000 new COVID cases reported. UN Security Council under Indian presidency to deliberate issue of Afghanistan today. India to share vision and perspectives on Afghanistan, says looking forward to productive deliberations on this important issue. COVID-19 continues to claim an ever larger number of lives in Bangladesh as the country records the highest single-day COVID death toll. Positivity rate stands at over 27%, while India delivers 183 metric tons of liquid medical oxygen through 5th Oxygen Express to aid Bangladesh in fight against the pandemic. In sports, in Tokyo 2020, wrestler Bajrang Punia storms into semi-finals, defeats Morteza Ghiassi of Iran by pin, while women's hockey team loses to Britain, misses bronze by smallest margin. President and Prime Minister appreciate remarkable courage, skill and resilience shown by players. In a major development, star footballer Messi not to stay with FC Barcelona. Club cites financial and structural obstacles, no statement from the player yet. And rain interrupts play on the second day of first test between India and England at Trent Bridge. England make a comeback after Indian openers dominate the English bowlers. India to resume day 3 at 125 for 4. And at the very beginning of the bulletin, we take you live to listen in on the RBI monetary policy.
Is now gaining momentum. Some high-frequency indicators are also looking up again during the months of June and July. Our expectation is that activity is likely to gather pace with progressive upscaling of vaccinations, continued large policy support, buoyant exports, better adaptations to COVID-related protocols, and benign monetary and financial conditions. Consumer price inflation surprised on the upside in May, reflecting a combination of adverse supply shocks, elevated logistics costs, high global commodity prices, and domestic fuel taxes. In June, headline inflation remained above the tolerance level, but price momentum moderated. Also, core inflation softened from its peak in May. International crude oil prices remain volatile. Any moderation in prices as a consequence of OPEC Plus agreement could contribute towards alleviating inflation pressures. On balance, the outlook for aggregate demand is improving, but underlying conditions are still weak. Aggregate supply is also lagging below pre-pandemic levels. While several steps have been taken to ease supply constraints, more needs to be done to restore supply-demand balance in a number of sectors of the economy. The recent inflationary pressures are evoking concerns, but the current assessment is that these pressures are transitory and largely driven by adverse supply-side factors. We are in the midst of an extraordinary situation arising from the pandemic. And this is a point which I have been highlighting almost in every monetary policy statement starting March last year. The conduct of monetary policy during the pandemic has been geared to maintain congenial financial conditions that nurture and rejuvenate growth. At this stage, therefore, continued policy support from all sides, fiscal, monetary, and sectoral, is required to nurture the nascent and hesitant recovery. The MPC continues to be conscious of its mandate of anchoring inflation expectations as soon as the prospects for strong and sustainable growth are assured. Accordingly, the MPC decided to retain the prevailing repo rate at 4% and continue with the accommodative stance with all its nuances. Let me now proceed and give an assessment, our assessment of the growth and inflation scenario. First, let me focus on domestic growth. Domestic economic activity has started normalizing with the ebbing of the second wave of the virus and the phased reopening of the economy. High frequency indicators suggest that consumption, that's number one, both private and government. Number two, investment. And number three, external demand. I repeat, high frequency indicators, and these are three aspects of the high frequency indicators and the three aspects of growth which I am focusing now. High frequency indicators suggest that consumption, both private and government, investment and external demand are all on the path of regaining traction. Let me now elaborate on each of these three aspects. Further easing of restrictions and increasing coverage of vaccinations are likely to boost private spending on goods and services, including travel, tourism, and recreational activities, propelling a broad-based recovery in aggregate demand. The robust outlook for agriculture and rural demand would continue to support private consumption. Urban demand is likely to accelerate with recovery in manufacturing and non-contact intensive services, release of pent-up demand, and the pace of vaccination. This is corroborated by encouraging movements in several high-frequency indicators, namely registration of automobiles, electricity consumption, non-oil, non-gold imports, consumer durable sales, and hiring of urban workers. The results of the July round of Reserve Bank's Consumer Confidence Survey suggest that 1 year ahead sentiments return to optimistic territory from historic lows. Early results from listed firms show that corporates have been able to maintain their healthy growth in sales, wage growth, and profitability, led by information technology firms primarily. This will also support aggregate disposable income of the consumers. Turning to investment, although investment demand is still anemic, improving capacity utilization, rising steel consumption, higher imports of capital goods, congenial monetary and financial conditions, and the economic packages announced by the government are expected to kickstart a long-awaited revival. Firms polled in the Reserve Bank's surveys expect expansion in production volumes and new orders in the second quarter of 21-22, and which they expect would sustain through the fourth quarter of the current financial year. And this bodes very well for investment. Innovation and working models adopted during the pandemic by businesses will continue to reap efficiency and productivity gains even after the pandemic recedes. This should help trigger a virtuous cycle of investment employment and growth. As regards external demand, it remained buoyant during the first quarter of 2021-22, and it was reflected very clearly in the increase in the volume of our exports, and this lent critical support to aggregate demand. Strong external demand is an opportunity for India, and further policy support should help in capitalizing on this. Global commodity prices and episodes of financial market volatility, together with vulnerability to new waves of infections, are, however, downside risks to economic activity. Taking all these factors into consideration, which I have now just spelled out, the projection for real GDP growth is retained at 9.5% for 2021-22. And this consists of, I'll give the quarterly breakup, this consists of 21.4% in Q1, 7.3% in Q2, 6.3% in Q3, and 6.1% in Q4 of 2021-22. Real GDP growth for Q1 22-23, that is next financial year, is projected at 17.2%. Let me now turn to inflation. Headline CPI inflation edged up sharply to 6.3% in May, driven by a broad-based pickup across all major groups on adverse supply shocks, sector-specific demand-supply mismatches, and spillovers from rising global commodity prices. It remained at 6.3% in June. However, core inflation registered an appreciable moderation in the month of June. The revival of the southwest monsoon and pickup in Kharif sowing, buffeted by adequate food stocks, should help in containing cereal price pressures in the months ahead. High-frequency food price indicators show some moderation in prices of edible oils and pulses. I repeat, high-frequency food price indicators show some moderation in prices of edible oils and pulses in the month of July on the back of supply-side interventions by the government. Inflation in core services like house rentals remains below historical averages, reflecting subdued demand conditions. Crude oil prices are volatile with implications for imported cost pressures on inflation. The combination of elevated prices of industrial raw materials, high pump prices of petrol and diesel with their second round effects, and logistics costs continue to impinge adversely on cost conditions for manufacturing and services, although, I repeat, although weak demand conditions are tempering the pass-through to output prices and core inflation. Before the onset of the pandemic, headline inflation and inflationary expectations were well anchored at 4%, the gains from which need to be consolidated and preserved. Stability in inflation rate fosters credibility of the monetary policy framework and augurs well for anchoring inflation expectations. This in turn reduces uncertainty for investors, reduces term and risk premia, increases external competitiveness, and thus is growth promoting. Since the start of the pandemic, the MPC has prioritized revival of growth to mitigate the impact of the pandemic. The available data point to exogenous and largely temporary supply shocks driving the inflation process, validating the MPC's decision to look through inflation. The supply side drivers could be transitory while demand pull pressures remain inert, given the slack in the economy. A preemptive monetary policy response at this stage may kill the nascent and hesitant recovery that is trying to secure a foothold in extremely difficult conditions. Inflation may remain close to upper tolerance band up to the second quarter of 21-22, but these pressures should ebb in the third quarter of 21-22 on account of Kharif harvest arrivals and supply side measure, and as supply side measures take effect. Taking into consideration all these factors, CPI inflation is now projected at 5.7% during 21-22, and this consists of 5.9% in Q2, 5.3% in Q3, and 5.8% in Q4 of 21-22, with risks broadly balanced. CPI inflation for the first quarter of 22-23, that is the next financial year, is projected at 5.1%. I would now like to focus on our assessment of the liquidity and financial market conditions. During June-July, global financial markets turned volatile in response to higher inflation numbers in several countries and the fear of early policy normalization with skewed economic recovery in some advanced economies. These developments need to be factored into our policy metrics for framing an appropriate response, given that safeguarding the economy, the domestic economy, from the vicissitudes of global spillovers and ensuring financial stability remain a top priority of the Reserve Bank. Nonetheless, domestic macroeconomic situation and evolving growth inflation dynamics will continue to be the principal pivot of monetary policy actions. The Reserve Bank, through its market operations, both conventional and unconventional, has maintained ample surplus liquidity since the onset of the pandemic to ensure easing of financial conditions in support of domestic demand. Buoyed by renewed vigor of capital inflows and the Reserve Bank's purchase of government securities in the secondary market, the total absorption through reverse repos surged from a daily average of rupees 5.7 lakh crore in June to 6.8 lakh crore in July 21, that is July 2021, and further to 8.5 lakh crore in August 2021 so far, and this is the figure up to the 4th of August. Under the revised liquidity framework announced on February 6th, 2020, that is February 6th of last year, the Reserve Bank has been conducting 14-day variable reverse repo rate auctions, what I call the VRRR auctions, as its main liquidity operation. With the commencement of normal liquidity operations, the VRRR, which was temporarily held in abeyance during the pandemic, has been reintroduced since 15th January 2021, and the initial absorption of rupees 2 lakh crore has been rolled over in subsequent fortnightly auctions. In parallel, access to fixed rate overnight reverse repo has been kept open. Markets have adapted and even welcomed the VRRR in view of the higher remuneration it offers relative to the fixed rate overnight reverse repo. Fears that the recommencement of the VRRR tantamounts to liquidity tightening have been substantially allayed. We have seen higher appetite of VRR in terms of our experience in the recent auctions, and this is reflected in the bid cover ratio, because the bid cover ratios are far higher, have been much higher than the total quantum which is put to auction, that is 2 lakh crores. So I repeat, we have seen higher appetite for VRRR in terms of bid cover ratio in the recent auctions, and this also we have seen over a period of time. Considering all these aspects, it has now been decided to conduct fortnightly VRRR auctions of rupees 2.5 lakh crore on 13th August, 3 lakh crore on 27th August, 3.5 lakh crore on 9th September, and 4 lakh crore on September 24th, 2021. So as you can see, in a calibrated manner, we are increasing the quantum, increasing the quantum that is being put under auction under the VRRR window, and this is mainly in response to the market appetite for VRRR auctions. And simultaneously, our overnight fixed reverse repo window also remains open. So it's a voluntary kind of thing which the investors and the banks, particularly the banks, can opt for. Now, these enhanced VRR auctions should not be misread as a reversal of the accommodative policy stance, as the amount absorbed under the fixed rate reverse repo is expected, I repeat again, as the amount absorbed under the fixed reverse repo is expected to remain more than 4 lakh crore even at the end of September of this year. Needless to add that the amount adopted under the VRRR window forms part of system liquidity. So system liquidity consists of both VRRR quantum as well as what is absorbed by the Reserve Bank at the end of every day through fixed rate reverse repo windows. The Reserve Bank's secondary market GSEC acquisition program, GSAP, has been successful in anchoring yield expectations while eliciting keen response from market participants. We propose to conduct 2 more auctions of rupees 25,000 crore each on 12th August and 26th August 2021 under the GSAP 2.0. We will continue to undertake these auctions and other operations like open market operations, that is OMOs, and Operation Twist, OT, among others, and calibrate them in line with the evolving macroeconomic and financial conditions. It is necessary to have active trading, I repeat and I reiterate, it is necessary to have active trading in all segments of the yield curve for its orderly evolution. Our recent GSAP auctions that have focused on securities across the maturity spectrum are intended to ensure that all segments of the yield curve remain liquid. Furthermore, our options are always open to include both off-the-run and on-the-run securities in the GSAP auctions and in the Operation Twist. It is expected that secondary market volumes would pick up and market participants take positions that lead to two-way movements in the yields. Our endeavor as the debt manager of both central and state governments has been to ensure an orderly completion of the borrowing programs at a reasonable cost while minimizing the rollover risk. In my earlier statements, I have emphasized orderly evolution of the yield curve as a public good in which both market participants and the Reserve Bank have a shared responsibility. As GSEC yields serve as a benchmark and have a high signaling value for other segments of the debt market, guidance on orderly path of yields was provided through auction cutoffs, devolvements, green shoe options, cancellations in the primary market auctions. The introduction of uniform price auctions announced recently for issuance of securities up to 14 years tenor is expected to mitigate the risks that bidders may face in primary segment. The decision of the government, and this is very important, the decision of the government to accommodate the GST compensation payment to states for the first half of the year within the existing cash balances should assuage the market concerns on the size of the government's borrowing program this year. The efficacy of RBI's monetary policy measures and actions is reflected in the significant improvement in transmission during the current easing cycle. The reduction in repo rate by 250 basis points since February 2019 has resulted in a cumulative decline by 217 basis points, 217, that is 217 basis points in the weighted average lending rate on fresh rupee loans. Domestic borrowing costs have eased, including interest rates on market instruments like corporate bonds, debentures, CPs, CDs, and T-bills. In the credit market, transmission to lending rate has been stronger for MSMEs, housing, and also large industries. The low interest rate regime has also helped the housing sector to reduce the household sector. The low interest regime has also helped the household sector to reduce the debt burden, to reduce the loan servicing. I think let me read it again. The low interest regime has also helped the household sector reduce the burden of loan servicing. The significant reduction in interest rates on personal housing loans and loans to commercial real estate sector augur well for the economy, as these sectors have extensive backward and forward linkages and are employment intensive. Let me now turn to the additional measures which I propose to announce, which I am announcing on behalf of the Reserve Bank of India. After the onset of the pandemic, the RBI has announced more than 100 measures to mitigate the impact of the pandemic. Going forward, our endeavor would be to continue to monitor the measures which are still under operation to ensure that the benefit of all the measures which we have announced, that is these 100 measures which we have announced, our effort would be to monitor them and to ensure that the benefit percolate down to the targeted stakeholders. Against this backdrop and based on our continuing assessment of macroeconomic situation and financial market conditions, certain additional measures are being announced today. The details of these measures set out in the statement on development and regulatory policies, which forms part, which forms part of the monetary policy statement as part B, that will be uploaded, and this will be, as you know, will be uploaded in the RBI website as soon as my statement is over. So a copy of my statement, a copy of the monetary policy committee, that is MPC statement, including the announcements which I am making with regard to additional measures. As usual, they have been uploaded in the RBI website immediately after my statement is over. And let me also say that certain notifications which are also which are as a consequence of the announcements which I have already made and which I am now going to make, they will also be issued either today or in the next few days. The first measure relates to on-tap TLTRO scheme extension of deadline. The scope of the on-tap TLTRO scheme, initially announced on 9th October last year for 5 years, was further extended to stressed sectors identified by the KV Kamath Committee in December 2020 and bank lending to NBFCs in February 21. The operating period of the scheme was also extended in phases till September 30th, 2021. Given the nascent and fragile economic recovery, it has now been decided to extend the on-tap TLTRO scheme further by a period of 3 months, that is till December 31st, 2021. The second measure relates to marginal standing facility, that is MSF, extension in period of relaxation. On 27th March last year, banks were allowed to avail of funds under the marginal standing facility, that is MSF, by dipping into the statutory liquidity ratio up to an additional 1% of net demand and time liabilities, that is NDTL, that is cumulatively up to 3% of the NDTL. To provide comfort to banks on their liquidity requirements, including meeting their liquidity coverage ratio requirement, this relaxation, which is currently available till September 30th of this year, is now being extended for a further period of 3 months, that is up to 31st December 2021. This dispensation provides increased access to funds to the extent of rupees 1.62 lakh crore and qualifies as high quality liquidity assets, HQLA, for calculation of the LCR. The next measure relates to LIBOR transition, review of guidelines, especially with reference to export credit on foreign currency and restructuring of derivative contracts. The transition away from London Interbank Offered Rate, that is LIBOR, is a significant event that poses certain challenges for banks and the financial system. In fact, it's not just a challenge for the banking system and the financial system in India, but it's equally a big challenge for the banking and financial sectors across the world, advanced economies, emerging market economies, and every central bank in each of these economies is trying to deal with the problem in its own way. And they have been spelling out their measures. We have also spelled out certain measures in the recent past. The RBI has been engaged with the banks and market bodies to proactively take steps to ensure that the transition is orderly and not disruptive. The Reserve Bank has also issued advisories to ensure a smooth transition for regulated entities and financial markets. In this context, it has been decided to amend the guidelines relating to two aspects, guidelines related to number one, export credit in foreign currency, and number two, restructuring of derivative contracts. Banks will be permitted to extend export credit in foreign currency using any other widely accepted alternative reference rate in the currency concerned. Since the change in reference rate from LIBOR is a force majeure, it's a force majeure event, banks are also being advised that change in reference rate from LIBOR or LIBOR-related benchmarks to an alternative reference rate will not be treated as restructuring. The next measure relates to deferral of deadline for achievement of financial parameters under the Resolution Framework 1.0. The resolution plans implemented under the Resolution Framework for COVID-19 related stress announced on 6th August 2020, exactly 1 year ago. They require sector-specific thresholds to be met in respect of certain financial parameters. Of these parameters, the thresholds in respect of 4 parameters relate to operational performance of the borrowing entities. And these 4 parameters are total debt to EBITDA ratio, current ratio, debt service coverage ratio, and average debt service coverage ratio. These ratios are required to be met by 31st March 2022. Now, recognizing the adverse impact of the second wave of COVID-19 and the resultant difficulties on revival of businesses and in meeting the operational parameters and the difficulty in meeting the operational parameters, it has been decided to defer the target date for meeting the specified thresholds, these specified 4 thresholds which are mainly operational parameters. So it has been decided to defer the target date for meeting the specified thresholds in respect of the above 4 parameters to 1st October 2022. So we are extending it by a 6 months period from 31st March 22 to 1st October 2022. Let me now summarize and conclude. As the COVID second wave ebbs, there is optimism that with adequate pandemic protocols and ramp up in vaccination rate, we should be able to tide over a third wave if it occurs. As a nation, we should continue to be vigilant and ready to proactively deal with any resurgence of the pandemic with more rapidly transmissible mutants of the virus should it happen. The recovery remains uneven across sectors and needs to be supported by all policymakers. The Reserve Bank remains in whatever it takes mode with a readiness to deploy all its policy levers, monetary, prudential, and regulatory. In parallel, our focus on preservation of financial stability continues. At this juncture, our overarching priority is that growth impulses are nurtured to ensure a durable recovery along a sustainable growth path with stability. In this endeavor, we have consciously chosen the path of optimism over gloom, inspired by Mahatma Gandhi. And I quote Mahatma Gandhi, quote, I am an irrepressible optimist, but I always base my optimism on solid facts. Thank you. Stay safe, stay well. Namaskar.
Welcome back. That was RBI Governor Shaktikanta Das with the RBI's monetary policy. The Reserve Bank of India has kept repo rates unchanged at 4%, maintaining accommodative stance. It has also kept reverse repo rates at 3.35%. The economy is recovering from the setback of the second phase of COVID-19. The projection for real GDP growth is retained at 9.5% for 2021-22. CPI inflation is projected at 5.7% from 2021 to 22. CPI inflation for the first quarter of 2022-23 is projected at 5.1%. Inflation is above tolerance level in June, but price momentum has moderated. High-frequency data suggesting consumption and investment are regaining traction. And Shyama Mishra, our correspondent in Mumbai, joins us. Shyama has been covering this story. Shyama, it seems that there are no real surprises, especially as major rates are concerned in the RBI's monetary policy. Shyama, if you can hear me. Well, we're trying to connect with our correspondent, Shyama Mishra. Shyama, coming to you right now, when we talk about the announcements made by Shaktikanta Das, RBI governor, can we say that there are no big surprises, no major changes as far as basic rates are concerned?
Well, definitely, Rukma. And as we were, talking about the expectations earlier, how the markets and analysts were expecting that there would be no changes in the RBI policy review. It was on expected lines, and as we were hoping that the governor would fill out some, statement regarding how the policy would be shaping up for the upcoming, we could say, the possibility of a third wave. So here we did hear about how the green shoots of economy could be seen, and also how the projection for the CPI has been revised. We were also hoping that that would be revised because the inflation was beyond, the tolerance level of RBI. And this time around, it has been changed to 5.7. And going forward, he did mention that it would be eased soon as Kharif crop comes in, and also the demand picking up. So overall, we could say that the entire policy that we were seeing was on expected lines, and how the governor has filled out we could say, future roadmap for the third wave, that if it could be possibly in the future. Also, very interesting fact over here is that we have always seen that the governor has been positive about the overall economic situation and how the recovery is happening. And this time around also, the governor has, pointed out that with all the quotes from Mahatma Gandhi and Martin Luther King, he has mentioned how we could be positive, we should be positive in this certain situation also. And to combat this particular situation of COVID-19 third wave, there are two weapons with us. One is scaling up the vaccination process, and the second is following the COVID appropriate behavior. These both things are in our hands, and we can definitely, have this the impact of the third wave, if not in completely out, but it could be in moderation if we continue to do so. But yes, overall over here, the economic factors have been spelled out, and some measures also the governor has pointed out for the stressed sector. So on tap TLTRO scheme that has been extended. This has been extended till December 31st, and we are hoping and guessing that the stressed sectors, including the MSMEs or other related sectors who have been facing difficult situation in the pandemic lockdown more than a year now, they could get some relief from this with this extension. Apart from that, we are also seeing that variable reverse repo rate auctions that was introduced in January 2021. That auctions would also be now conducted fortnightly. There's one GSAP auction that is happening, so that would be also conducted, and that is of 25,000 crores each on 12th August and 16th of August. So that is going to happen. So a lot of factors the governor has mentioned for the overall economic, we could say, measures. And apart from that, how the economic situation would be panning out in next 2 to 3 months. And as the second wave has, started losing its effect, we are getting back on track. And apart from that, if we continue to scale up the vaccination and continue to follow the COVID appropriate behavior, we could be ready to face the third wave if that happens. Rukma.
Right. When we talk about the expectations from the Reserve Bank of India, financial experts had thought about a wait and watch strategy, since it has little elbow room to maneuver monetary policies. Commodity prices are high, the rising global rates, and also his concern over, violently fluctuating crude oil rates. How can that affect inflation in general? What did he have to say as far as inflation was concerned? Was he worried about it, the situation?
Yes, Nupma, we heard the governor saying that how the inflation level has been beyond the target range and beyond the tolerance level of Reserve Bank of India. And we have always been talking how the two important factors for Reserve Bank of India are keeping the inflation in check and also ensuring that growth is happening in the economy. So when we are talking about inflation, we have seen that because there was no supply that was happening, there was no activity that was happening, and the crude oil prices, the fuel prices in our country also, that has increased. And we know for the fact that once the person or the carrier, he travels or they travel with their own produce from the farm to the APMCs and to the markets, everywhere the fuel is involved because they are transporting that. So that increases, and because of that, there has been a cascading effect where all the prices of everything else has also been increasing. And you've mentioned about crude oil prices. So definitely that has been having an impact in our country as well. And overall, we also hear about we also have to talk about the fact that how the recent floods in a lot of states has shown its fury in all those agricultural stretches where the produce was about to get ready, where the produce was ready, and that has been hit badly. So in coming time, when the Kharif season drops, they come in, and some of those crops have been affected or destroyed. We could see that coming in future also. And because of the fact that even May, even June, the prices of CPI inflation, the percentage of CPI inflation was above 6%. This is a concern for Reserve Bank of India, and that is why this has been revised. Earlier it was 5.2, and now it has been 5.7. So with all the measures, with all the challenges that are posed here, the governor has counted that also in the entire revision as well. So definitely a major challenge over here is to control the inflation, given the fact that third wave could be there over, before us. And when that happens, we should not have another lockdown. If that happens, the economy, the activities would again once slow down, because just now we are seeing the markets are showing a green color because activities in major cities, including Mumbai, including the financial capital and other places, have also started picking up. They are slowly easing out the restrictions. So the markets have also started showing support from all the ends. And these measures also have been gaining all the, we could say the strength from all ends. So following the COVID appropriate behavior and scaling up the vaccination would be our two tools over here. Apart from the fact that overall we could say the economy, the activities could be well managed, and many of the states, most of the states are now taking into consideration when the third lockdown, if that happens, when the third wave hits us and that lockdown happens, how can we ensure that the economy keeps going, that the industry keeps going, all the factory activities keep going, even when the lockdown is there in our country, even when the
Right,
state
Shama.
have to take major
So,
decisions
expectations of a better time ahead. The mood is upbeat, as far as RBI Governor Shaktikanta Das said. Expectations are high, expectations are good for the economy to bounce back, and always optimistic, as he mentioned, giving the example of those quotes and Mahatma Gandhi. Many thanks to you, Shama. You keep your eyes on that story. We'll be back with you for more later on. And moving on now, in a first of its kind initiative, Prime Minister Narendra Modi will interact with heads of Indian missions abroad, along with stakeholders of the trade and commerce sector of the country today at 6 p.m. via video conferencing. The event will mark a clarion call by the Prime Minister for local goes global, make in India for the world. Exports have a huge employment generation potential, especially for MSMEs and high labor-intensive sectors, with a cascading effect on the manufacturing sector and the overall economy. The purpose of the interaction is to provide a focused thrust to leverage and expand India's export and share on global trade. The interaction aims to energize all stakeholders towards expanding our export potential and utilizing the local capabilities to fulfill the global demand. Union Commerce Minister and External Affairs Minister will also be present during the interaction, which will also witness participation of the secretaries of more than 20 departments, state government officials, members of export promotion councils and chambers of commerce. On the fifth day of the third week of the monsoon session, the Lok Sabha is slated to discuss COVID under Rule 193. Union Finance Minister Nirmala Sitharaman will move the Taxation Amendment Bill 2021 for consideration and passing. The bill further aims to amend the Income Tax Act 1961 and the Finance Act 2012. Union Minister Dharmendra Pradhan will move the Central Universities Amendment Bill 2021. In the Rajya Sabha, there are various important bills slated for consideration and passage, including Safeguarding and Adjudicating Farmers' Economic Rights Commission Bill 2018, Population Regulation Bill 2019, State Reorganization Commission Bill 2019, the Constitution Amendment Bill 2019, Amendment of Article 343, the Constitution Amendment Bill 2019, Amendment of Articles 217 and 224, and several private members' bills have also been lined up for introduction in both the houses. India continues to see improvement in the recoveries of COVID-19 cases. As per latest updates by the Health Ministry, we have registered 3,10,15,844 recoveries so far across the country, of which over 41,096 patients have recovered in the past 24 hours. With this, the recovery rate has increased to 97.36%. 44,643 daily new cases were reported in the last 24 hours. Our active caseload is currently 4,14,159. While active cases constitute 1.30% of total positive cases, the weekly positivity rate continues to remain below 5% and stands at 2.41%. Daily positivity rate currently stands at 2.72%, which is less than 3% for the last 11 days. With substantially ramped up testing capacity across the country, a total of 16,40,287 tests were conducted in the last 24 hours in the country. Cumulatively, India has conducted over 47 crore 65,33,650 tests so far. In a significant achievement, our COVID-19 vaccination coverage has crossed the landmark of 49 crores. Cumulatively, 49 crores 53 lakh 27,595 vaccine doses have been administered to 57 lakh 64,712 sessions. 57 lakh 64,712 sessions vaccine doses were administered in the past 24 hours. The new phase of universalization of COVID-19 vaccination began on the 21st of June 2021. The Union government is committed to accelerating the pace and expanding the scope of COVID-19 vaccination throughout the country. And let's bring you news now about the markets. Domestic equity markets were moving between gains and losses on Friday. Broader markets outperformed benchmark indices. Apart from the listing, eyes will also be glued on the 4 IPOs that will close for subscription today. Devyani International, Krishna Diagnostics, Exaro, Tiles and Windlass Biotech have all been oversubscribed by investors. The Nasdaq and S&P 500 closed at their highest levels ever on Thursday. The markets gained momentum after data showed U.S. unemployment claims declined further last week, along with other mixed economic data in anticipation around Friday's job report. The Dow Jones Industrial Average rose 248.47 points or 0.71% to 35,041.14. The S&P 500 gained 24.53 points or 0.56% to 4,427.19, and the Nasdaq Composite added 109.26 points or 0.74% to 14,889.79. And now a look at COVID-19 figures from across the world. As the fight continues worldwide, more than 20 crore 16 lakh people have so far been infected by coronavirus, while recoveries have crossed 18 crore 14 lakhs. The deadly virus has claimed the lives of over 42 lakh 79,000 people globally. The United States has been witnessing a recent sudden spike in new daily COVID cases with over 3 crore 62 lakh. The country remains the worst affected in the world. Deaths due to COVID in the US have crossed 6 lakh 31,000. And news now from the Tokyo Olympics. Wrestler Bajrang Punia has stormed into the semi-finals after defeating Morteza Ghiasi of Iran by pin in the men's freestyle 65 kg quarterfinals in the Tokyo Games. He will wrestle three-time world champion Haji Aliyev for a place in the final of the 65 kg category. Earlier, Bajrang beat Ernaz Akhmataliyev of Kyrgyzstan 3-all on criteria to reach the quarters. Bajrang scored the biggest points of the match through a takedown in round 1. An Indian women's hockey team today displayed a spirited fight before losing out to Great Britain 3-4 in the bronze medal playoff match in the Tokyo Olympics. The women's team made a remarkable turnaround after going down 0-2 to make it 3-2 at halftime. However, Great Britain's skipper Holly Pern-Webb scored the equalizer in the third quarter of the game. Grace Balsden gave Great Britain the lead in the fourth quarter, helping the Britons to take the bronze in the Tokyo Olympics. Well, President Ramnath Kovind tweeted on the Indian women's hockey team and their performance. The Indian women's hockey team excelled on the field and won the hearts of every Indian with their stellar performance. We are proud of you all. And Prime Minister Narendra Modi also praised the Indian women's hockey team's performance against Great Britain in particular. He said, "We will always remember the great performance of our women's hockey team at Tokyo 2020. They gave their best throughout. Each and every member of the team is blessed with remarkable courage, skill and resilience. India is proud of this outstanding team." The Prime Minister also tweeted, "We narrowly missed a medal in the women's hockey, but this team reflects the spirit of New India, where we give our best and scale new frontiers. More importantly, their success at Tokyo 2020 will motivate young daughters of India to take up hockey and excel in it. Proud of this team." Union Sports Minister Anurag Thakur also tweeted praising the Indian women's hockey team and their stunning performance. He said in his tweet, I quote, "India's daughters are determined athletes. We are immensely proud of you. A giant leap of faith and fighting spirit by our women's hockey team, a legacy that will inspire us to do even better. You have shown us the way." And with that, it's a wrap on this edition of News on the Hour. Meanwhile, news and updates continue on DD India. So stay tuned and keep watching. Namaskar.